How landlords can save hundreds of pounds in tax with this little-used hack if you live with your spouse or civil partner and earn income from a property you jointly own. You'll usually be taxed on an even split of the rental income between you. However, if one of you has invested more into the property than the other, it could be worth adjusting the default income split for tax purposes. You could save hundreds or even thousands of pounds a year in income tax. What is Form 17? Form 17 allows married couples or civil partners to be taxed based on the actual shares they own in a joint property, rather than HMRC's standard assumption of a 50-50th split. Miles Dean, head of international tax at law firm Anderson, said, "By law, rental income from jointly owned property is split equally between spouses or civil partners. If one partner owns a larger share, they can submit Form 17 with evidence, such as a declaration of trust, to be taxed based on their actual ownership of the income. This is often used for tax efficiency, such as shifting more rental income to a lower-income spouse to reduce the overall tax burden. For example, let's say Sarah is a higher-rate taxpayer and owns 30% of an investment property. Her husband Mark is a basic-rate taxpayer and owns the remaining 70% of the property. The rental income from the property is £10,000. Under HMRC's default 50-50 rule, they each pay income tax on £5,000. Sarah would pay £2,000 in tax, and Mark would pay £1,000 to give a total of £3,000. However, if Sarah and Mark complete Form 17, Sarah would pay higher rate tax at 40% on rental income of £3,000, while Mark would pay basic rate tax at 20% on £7,000, reducing their overall tax bill to £2,600. This results in a £400 tax saving. Form 17 and tax implications. Completing Form 17 can have a number of tax implications. As explained above, specifying your actual property ownership percentages can lower the amount of tax you pay on rental income as a couple if you fall into different income tax bands. If one partner is a basic rate taxpayer and the other is a higher rate taxpayer, you can save on tax by allocating a larger share of the rental income to the lower rate taxpayer. The ownership percentages declared only applies to income tax, not capital gains tax, Mr. Dean said. For CGT purposes, ownership remains based on the underlying beneficial ownership. It should be the same as declared in Form 17. If the property is sold, each owner's capital gains tax liability is based on their actual beneficial ownership. Form 17 doesn't affect how the property is treated for inheritance tax purposes, as inheritance tax is already based on actual beneficial ownership. However, if one spouse transfers part of their share of the property to the other, but continues to benefit from it, HMRC may treat this as a gift with reservation of benefit. This means the transferred share remains in the original owner's estate for death duty purposes, even if Form 17 changes how income is taxed. How to complete a Form 17. To complete a Form 17, follow the steps below. 1. Gather the necessary documents. Make sure you have your property deed, mortgage statements, and any other documents that outline ownership shares ready before you start. 2. Access the form. You can find Form 17 online on the Gov UK website. You'll need to have an up-to-date browser, and you must complete the form fully before printing it. You won't be able to save it as you go. 3. Provide the required information. You'll be asked to provide personal details for both you and your partner, including your national insurance number and your address, along with details about the property. For declare beneficial interest, you must clearly state the actual percentage of the property each of you owns. This must match the actual financial contributions to the property. 5. Print and sign the form. Once completed, print out the form, and both parties must sign and date it. 6. Attach supporting documents. You should include any supporting information that shows the split of shares, such as a deed of trust or a deed of assignment. 7. Submit the form to HMRC. Post your form and documents to Pay As You Earn and Self-Assessment. HMRC BX91 AS. You must do this within 60 days of signing it. When to complete a Form 17? You'll need to complete a Form 17. If you earn income from a joint property and wish to declare unequal ownership percentages for tax purposes, Form 17 allows you to pay income tax based on the actual ownership percentages, rather than HMRC's default 50-50th split. However, you can only do this if you own the property with a spouse or civil partner and you live together. You must own the property as tenants in common. You cannot make a declaration for income to be divided in unequal shares if you own the property equally. Nor can you submit a Form 17 if you are separated or if one of you disagrees with the split. You must not use a Form 17 for income from commercial letting of furnished holiday accommodation partnership income, income from shares in a company, income from properties held as beneficial joint tenants where you are both jointly entitled to the whole property and income. Form 17 facts. How long is a Form 17 valid for? A Form 17 remains valid until the property is sold or transferred, the couple separate, divorce, or stop living together. One partner dies, or if one partner transfers any beneficial interest to the other, or a third party. Keep in mind that when you complete the form, it must be delivered to HMRC within 60 days, otherwise it becomes invalid. Can you backdate a Form 17? No, you can backdate a Form 17. It only takes effect from the date it is signed. Who should submit a Form 17? You should submit a Form 17 if you own an investment property jointly with your spouse or civil partner in unequal shares. Completing the form enables you to inform HMRC of the actual ownership split so that the tax you pay is based on this rather than the standard 50-50th split. It can be particularly beneficial if one of you pays a higher rate of tax than the other. Allocating a larger share of the property to the lower earning partner can reduce your overall tax liability.